For 2 months, India had been under a total lockdown to fight the COVID-19 epidemic. Businesses, factories, shops were all shut. People lost their jobs and incomes. From June 1st, India slowly started to open up, but it was not back to normal. The expectation among economists is that India's economy will shrink and GDP growth will be negative for this year. This has not happened in 50 years. There is doom and gloom all around, but not in the stock markets. In June, India's stock markets were among the best performing in the world. The BSE SENSEX went up nearly 8%. Many people ask me for an explanation of this puzzling trend. So I analyzed some of the data to see if there is a good explanation for this. To be clear, this is true of global stock markets too. I do not have any clear answers to explain why India's stock market is so euphoric when the entire economy is feeling despondent. But I did observe some curious patterns which I will highlight. Usually, if people feel it is a good time to invest, then the demand for shares is high and the stock market goes up. But it can also be the case that instead of investing, people are merely speculating on share prices by buying and selling shares during the day. For example, an investor may believe that it is a good time to invest in a company like, say, Tata Motors, because demand for cars may go up and buy its shares. Or they can speculate on the shares of Tata Motors by buying them early in the morning, selling them before lunch at a slightly higher price, then buying them again post-lunch, selling them again before the close of the market. In both these cases, the share price of Tata Motors can go up. Similarly, was the big stock market jump in June driven by investment or speculation? Stock exchanges give us data called delivery percentage of shares on a daily basis. This can be used to measure the amount of speculation in the stock market. It turns out that the speculation levels in the stock markets in June was very high. In fact, measured as delivery percentage, speculation levels in June was the highest in 15 years. It was higher than even during the time of the great financial crisis of 2008. Now that we know that speculation levels was very high in June, the next question is, who was speculating so much in our stock markets? Was it the promoters driving their stock prices up? Or banks investing the excess liquidity in the markets? Or was it mutual funds, or was it foreign money? Again, using market data, we can try to find some answers. Indian mutual funds have actually been taking their money out of the stock markets in June and in previous months. Domestic investors have also been taking their money out. It turns out that there was a large amount of foreign money that came into India's stock markets in June. Nearly 22,000 crore rupees of foreign money came into the Indian markets just in the month of June. This was the fourth highest month of foreign inflows in the last 5 years. When the whole world is hit by an epidemic, when economic activity in India is among the worst affected due to the extreme lockdown, and when domestic investors are withdrawing their money, why did foreign investors pour so much money into India's stock markets? We can now establish 3 facts. India's stock markets rose 8% in June, among the highest in the world. Speculation levels in India's stock market was also the highest in June in more than a decade. And huge amounts of foreign money came into the stock markets in June, again among the highest. So is the story of the rise of India's stock markets a case of foreign hot money coming into India and speculating in stocks? Or are these mere coincidences? If this was foreign hot money speculating in our stock markets, then will this money go away quickly and cause a crash? We do not know the answers to these questions. But it certainly calls for a closer investigation by stock exchanges and the regulator.